is on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from Hampton Studios. I'm Ibn Mabunda. Let's get to business. Government has declared a state of national disaster in light of the El Nino-induced drought. FuseNet earlier indicated that over 5.2 million people in the rural districts of Zimbabwe were in need of food aid. This was indicated by the Minister of Information and Publicity, Honorable Monica Muchangwa, at a post-cabinet briefing held at the new Munumtapa buildings in the capital this afternoon. Let's have a look at the footage to get more perspective.
Today, Cabinet considered and approved the National Renewable Energy Policy, which was presented by the Minister of Industry and Commerce, who is the chairman of the Cabinet Committee on Industrialization and Export Development. The renewable energy sector in Zimbabwe comprises solar, hydro, wind, geothermal, and biomass energy sources. The National Renewable Energy Policy seeks to attain the following: to establish market-oriented measures and regulatory instruments for the development of the renewable energy sector in our country, to address also the barriers to the uptake of renewable energy in Zimbabwe, and to achieve an installed renewable energy capacity consistent with the country's projected energy requirements under Vision 2030, to promote investment in the renewable energy sector, to provide the necessary guidelines, incentives, standards, procurement and financing mechanisms for promoting the development of off-grid projects, which have the potential to increase electricity access in rural areas, and finally to promote the manufacturing of renewable energy equipment in the country, as well as local skills development in that regard. This policy, if implemented, will go a long way in resolving current energy problems besetting the country and has a negative ripple effects thereof in the entire.
As power shortages continue to grip the country, Cabinet today approved the National Renewable Energy Policy, which was submitted by the Minister for Industry and Commerce, Honorable Mangaliso Ndlovu. The policy focuses on solar, hydro, wind, geothermal and biogas energy and embodies schemes meant to encourage the production of such alternative sources of power. Once again, let's have a look as Minister Muchangwa sheds more light on that particular development.
National disaster in regard to the El Nino-induced drought, which adversely affected the country's agricultural production and food security in the 2018-2019 agricultural season. The declaration paves way for the launch of the country's appeal for drought relief assistance and the associated resilience built in support by the international community. The launch of the country appeal is due to take place, as I said, this afternoon, just after this press the national declaration of a state of disaster in relation to the 2018-2019.
Now, in the face of excessive load shedding running up to over 18 hours, as well as winding long queues of fuel, the minister also gave an update on the fuel situation, shedding light to the effect that perhaps there could be some changes that are aloof. Again, let's have a look.
An arrangement to unlock the supply of 400 megawatts has been concluded with ESCOM. In terms of this arrangement, government through Treasury has commenced the payment of an amount of $890,000 per week towards the settlement of its debt to ESCOM. Furthermore, similar discussions will soon commence with HCB of Mozambique. Regarding fuel supply, Cabinet was informed that the situation had slightly improved during the week under review. The Minister of Energy and Power Development, Honorable Chasi, also advised Cabinet that the fuel supply situation was expected to improve even further within the next few days on the back of the funding arrangements currently under active consideration.
Zimbabwe's trade deficit widens to a negative $215 million in the month of June. This is the worst performance for the country in a period of 9 months. Our turn was impacted by a significant jump in our imports, as well as a significant decline in terms of our exports. At $475 million, June exports were the highest in 6 months, driven by increased fuel importation, of course, diesel and petrol. Diesel alone now accounts for 25% of Zimbabwe's total imports, up from an average of 16% between 2015 and 2018. Just to take a deep dive into the stats to give you perspective in terms of what has actually played out. Now, the first column, this of course would be the months in perspective. The first column here would be the one that is attributable to diesel, and as I just said, diesel is constituting 25% of our imports. And as you can see, this long bar at the start of the graphical presentation, the indicative of the diesel imports that we have had over the past few months. And as you can see, that's the tallest bar on that particular chart in the month of June, coming in at that significant position there. Also in the stats, the exact figures for that would be $112 million. The cumulative net trade deficit position of $616 million in the deficit for the period of January to June is, however, comparatively the most improved since 2009. As we make progress, tobacco volumes continue to gain momentum, falling just 0.36% against last year's performance. From the figures, as you can see here, this is 2018 performance, where we recorded a record 253 million kilograms of tobacco, and at day 95 we are just 0.35% lower than last year's performance, which came in at 246 million kilograms, and in 2019 we are at 245 million kilograms. The volumes have, however, not generated commensurate value, which is 32% below last year's performance. Bank ABC revises bank charges in line with the sector trend as banks factor in macroeconomic pressures, in particularly inflation, and of course the revision of interest rates by the Reserve Bank of Zimbabwe. Bank ABC follows in the footsteps of CABS and Stewart Bank, which have revised bank charges in recent weeks. Tonga Tulip leases out non-core businesses. Tonga Tulip Zimbabwe is leasing out most of its non-core business under Hippo Valley and Triangle Estates to interested parties, and is set this week as the deadline for bidding. In a public notice, the company said the bidding process was open to business entities as well as individuals keen to run retail shops, beer halls and canteens on 5-year lease agreements. This concludes our evening news bulletin. Up next is a look at the news and a news review. Don't go anywhere.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication and experience, making us your ideal partner for success.
I have a news review, and with me to discuss the news that just was reported on is economist Tinashe Kadur. Tinashe, good evening and welcome to the show.
Thank you, Eben. How are you today?
Won't complain. Should only get better yourself.
I'm well, a bit, hectic. We are about, to have a change in terms of seasons. We are in a strong winter, so we are now preparing for summer season. So, a change in season comes with it, some healthy issues, a bit of flu or something like that, but I'm okay.
But I think the nice haircut will keep you going. To get the ball rolling, government declares a state of national disaster in light of the El Nino induced drought. What is your comment where the particular move is concerned? Of course, this is meant to give government some kind of leverage in clamoring for international assistance. Your comment?
First of all, if you look at the ZIMFAC report where they did, an assessment in terms of production of the cereal crop, as well as the state affairs when food insecurity is concerned. I think what came out from that report, together with the FuseNet report, is that at least 5.2 million people in rural areas are food insecure. So FuseNet is actually about to do another assessment in urban areas as well. So you are finding that the situation is not just centered on the rural areas, but also there is actually food insecurity in urban areas as well. So I think for the government to say that it's now a national disaster in light of that El Nino induced drought, I think it's actually good for the nation, since the government has to source funding from the international community, as well as the NGOs and other charitable organizations. We have seen, Namibia, for instance. Namibia actually declared a national disaster, I think 3 weeks ago. You find that the whole of Southern Africa was affected by this El Nino induced drought. So the problem that we really have is traditionally, when we experienced such droughts, when we experienced poor harvest in maize subsector, for instance, we could have closer markets like your Zambia even and your South Africa, where we could import maize cheaply. But we are looking at this situation currently, where your South Africa was also affected, your Zambia was also affected. So it means that the country now has to import that maize and other grains from as far as Mexico, which has a huge impact on the landed price of that grain. If we could import regionally, like a closer market, like for instance, let's say Zambia, it means that the landed cost might be lower, might be an average of US dollars 240 per metric ton of maize. But if we have to import from as far as Mexico or Brazil, it means that the landed price might maybe escalate from that $240 maybe to something as high as $380 per metric ton, which is actually an extra pressure to both the fiscus as well as the current account balance. You are looking at the fiscus, the fiscal position, as well as the current account. Those are the two accounts that the government is trying by all means to balance them. So all those pressures, I think we have an adverse effect in those accounts as far as consolidation is concerned.
Now you mentioned an interesting subject which is quite thematic to what we just reported on. Trade deficit widening to $215 million in June, which is the worst performance over the 9-month period. Meanwhile, the minister continues to boast about the twin surplus that the country, he says, has recorded over the past
Do you remember, Ibn, what I said when we analyzed the budget recently? I actually said that in the first quarter, unlike what the minister is saying, we actually experienced a current account deficit.
Tinashe, you should have attended the post-budget review where we were with the minister. You should have raised some of these concerns.
Even in his budget as well, if you look at the appendix, the tables in the appendix, they're actually showing, a trade balance deficit. So to say that we have a surplus, to me, a surplus is in the eating. A surplus is in the quality of what you are eating or the quality of what you are consuming. If you say you are a surplus, but you still have, the current problems that we have in the nation that we are experiencing in the economy, it raises, some serious concerns about that quality of that surplus. Yes, you can have a surplus when you are foregoing, certain key payments that you should do. Then you say, you now have a surplus. You now have a consolidation, a fiscal consolidation. Your accounts are now under check. But you look at those things, those accounts won't be under control. The sustainability will still be questionable. But looking at the June numbers, we are seeing a trend where imports continues to be suppressed because of the of those import management, as well as foreign currency shortages, together with those restrictions from the RBZ, as well as supporting statutory instruments. We have also seen the power of the increases in duties that it had that constraining effect on imports. But on the export side, we have seen as well, exports underperforming. If you look at the June numbers, it's for the first time where gold grossly underperformed. If you look at the June numbers, we are seeing nickel came in as the number one, export earner in terms of performance in the month of June. Then followed by gold. Tobacco is not nowhere near in terms of export performance. We are seeing, the volumes as well as the income, the revenue from there continued to be underperforming. I think what's happening, those high stock in key market of China, I think
tobacco as well as
Brazil, I think it's continuing to have a negative impact in terms of export performance of that key resource there. But for gold, that's where my worry is. If you look at traditionally, the primary producers used to be the major drivers of gold production. But if you look at what has been playing out in the economy, cost has been escalated, especially for those major producers. Then the small scale producers, they had bridged, or they had covered that gap that has been left by those primary producers. I think the small scale producers, as of now, they are now contributing more than what's being delivered by primary producers to Fidelity printers and refineries. But what has been driving the production or the deliveries from small scale producers, to me, is not increased production per se, but it was to do more of formalization of their operations. If you look traditionally, those small scale producers, they were called legal miners, and they could sell their gold at the open market or openly. But with the change in laws, we have seen, the RBZ taking, a softening stance, accommodating them, and you have seen, deliveries actually, responding positively. But with now the challenges in the economy, where even the FPR and the RBZ are struggling to pay those deliveries on time, I foresee, a bit of smuggling, where those, the small scale players can just smuggle out their gold in search of, higher prices, as well as in search of the much needed US dollar. Because if you look at in the local market, they are getting a certain portion, in bond notes or in local currency, then maybe the 55% is retained, in their foreign currency accounts. But when they want to use it, it has to be converted to local money. Then they will transact in local currency. but we are seeing an economy which still has that high, appetite for the US dollar, and everyone who is earning, who is producing a certain commodity that can make that person earn US dollar, we are seeing that person, trying to find certain avenues to seek, for that, loved currency. You see why people continue to pursue or to demand US dollars. I think the problem that's coming out in the economy is also, of policy as well. Look at the finance minister's budget review and supplementary budget. To me, what's the major question, the major concern is what's the signal being sent by the finance minister into the economy? If you are now a local currency economy, you should, send signals that shows all economic agents that the government is indeed, want to make this currency project work, and is actually committed to cement its position.
Where do you feel there is a bit of a contradiction with
you look at the justification of tariff increases in terms of electricity, as well as upward review of those prices.
But the pricing of ZES has been suboptimal. I mean, if
look at the justification. Look at the justification. He's saying that I've increased from 9 cents to, let's say, 27 cents, but if you convert it, it's just an equivalent of your 3 US cents. So to me, as a rational economic agent, I would just think that, okay, the finance minister is making his budgetary decisions in US dollars, then maybe convert it in local currency at a certain rate, because the thinking there is still in US dollars.
Look, so, but we cannot hide behind the finger. We've been a dollarized economy for a good 10 years.
So to me, you could have, find other ways, to justify the increment in terms of those electricity charges, as well as other service fees, rather than saying that, okay, if you convert it in US dollars, it's this price. But who is earning in US dollars? When your civil servant is earning in RTGS dollars, then you are giving that justification of saying
fact of
in
the
US
matter
dollars
remains
is like
a lot
this.
of pricing in the economy is still pegged against the US dollar. So right from the budget cascading right to
but
even the tomato that's sold in Baransika is still being pegged at US dollar.
As government or as an authority, when you want to drive a certain policy, remember when you change a currency, like when we dollarized, it has got some long-lasting psychological effect.
Of course.
So to me is the finance minister should be the one who is pushing that reform, that psychological reform in terms of our mindset, in terms of our pricing, rather than trying maybe to knock or continue knocking in our heads, saying that, okay, if you turn it into US dollars, this is the equivalent amount or something like that.
We
need to move from that psychological.
Close this
we need to move away from that
and make time for Markets Daily. Thank you, Tinashe, for the perspectives. Thank you for staying with us. Up next is a look at the stock markets in Markets Daily with Anesu. Don't go anywhere.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anis Chumbumu, and let's get the markets rolling. Now, just before we get into the markets, just in the U.S. Ambassador Brian Nichols has announced a 45 million donation towards WFP Zimbabwe in response to the large drought situation that we're facing that has put a lot of Zimbabweans under a critical food security situation. This 45 million US dollars is supposed to support at least 360,880 rural Zimbabweans within the country. Now, as we just get into the markets today have continued on this continued free fall, coming off 0.35% for the all-share index, 0.36% for the industrials index. For the industrial index to settle at 612.22 points, while the all-share index is at 183.51. Continually, our year-to-date gains are being shaven off 18.1 for the all-share for the top 10 index and 7.41 for the resources index. Resources index pretty much stable again today, but the top 10 index did come off 0.55%, largely a 3.66% drop in cassava. Smartix share value today selling at about 242.84 cents. And now Delta has added about 1.25%, emerging as the best performing counter of the top 10 index today, trading at 344.24 cents. We have a look at Old Mutual. Old Mutual continues on its rally there, pretty much making it 13 sessions in a row now, as it continues to go up. Now, mainly for buyers for that kind of counter. Currently, it seems as if the 90-day vesting period is a non-event for them, especially considering that we have a weakening currency that has continued to deplete. So as the Old Mutual Implied rate, which is pretty much far much ahead of the official rate and even the para market rates. So it would translate to you that they would be enjoying some sort of premium whenever they then sell it off. But as at the current rate, buyers seem to keep on pushing that price up, and it is now at 1,780 780.38 cents today, which is 2.6% ahead of its week opening price, and a month-to-date gain of about 9.41%, which has pretty much left it out to be the best performing counter on a year-to-date basis at 124.48% above its year opening price. Trailing that would be Padenga, which has added 0.19%. I suppose a reaction from yesterday's publication within the newspaper, where it did mention that they would be they're looking to acquire a 50.1% stake, which is pretty much controlling in a mining corporation called Delegrio. Now, on a 5-day trend, 1.93% down for the all-share index, 2.69%, top 10 index 0%, on the resources index 1.95% for the industrials index. Industrials index shows a much more stronger weakening there as compared to the all-share index, mainly because of how the sell-off currently on the market has been very much has a wider base rather than it being largely controlled by the top 10 index. Now we have a continual downward pressure on even on the volumes side of business in terms of stocks that are being traded on a day-to-day basis. Today, volumes were also suppressed. Yesterday, they were suppressed. So it seems as if volumes are continually coming off. I would suggest probably it seems as if ever since Mutuli and his twin Mangujga did actually some sort mop up about 1.2 billion RTGS on the market. It has caused for the availability and fluidity of that of such kind of monies on the market to be a little bit difficult, because prior to the $1.2 billion mop up there had been, a lot of investors would rather put their money in stocks or in foreign currency, but then with the latter being a much more favorable option. Now that RTGS is a little bit more difficult to come by at the current moment, it seems as if they are playing their hand much more within the forex market, except for them to actually put their money on the old mutual stock. Now, Willdale did lead the pack of laggards today, coming off 14.4% for it to settle at 2.14 cents, while Cassava did come off. Simbisa also down 2.22%. OK and Sitco did trailing and capping the set of top 5 laggards today, coming off 0.33 and 0.16%. Ariston did add 20.04% on its share value to settle at 5.45 cents. Still one of my very much favorite counters, largely because of its agricultural aspect. I am very much interested in agriculture myself. It is one of the largest banes of our economy at the current moment, but the drought that we have been currently facing is putting much of the productive side or the sustainable side of our agriculture sector under much threat, and will be causing a much more difficult issues going into the future if things do persist. I mean, if we do continue within this regard, also tackling in our minerals side of the economy, we will continue being in such a situation where we are expecting a continued recession, maybe even in 2020. Some of our researchers today did make such kind of a discovery, but as we're just polishing up and also just nipping and tucking a couple of other notes for our deluxe edition for the economic paper, as mainly because of how the government has been releasing a lot of data in the past couple of days. Has been changing some of our projections, but we are still in somewhat the same direction. Maybe the magnitudes would differ. Just to close off on our stock market day, Delta coming up 1.25%. Old Mutual already touched on that. Padenga also I have touched on that. Sitco International Limited up 0.09% to sell at 212.44 cents. Now our old mutual implied rate is settled at 14.57 cents there to the $14.57 to the dollar, 10.65 for the parallel market, as it has weakened today from a 10.5 level yesterday to 10.65. Some trades going as high as 10.75, 10.8, and some maybe around about 11 there, but depending on a willing buyer, willing seller scheme. The official RBZ rate today is at 9.5. Pretty much gives us much more room in terms of the premiums between the three markets at the current moment. Now, for more of the discussions on what I've just previously mentioned on how we are expecting to continue in a recession even into 2020, you may find such delightful or rather such illustrious explanations and insights within our economic review outlook that stretches into, with the focus that stretches into 2020 in the same period at the current moment. Q2 is ready and is selling like hotcakes. Industrialists, business leaders, I urge you to get it, and you would not miss out on any kind of development that should come your way, as we have been somewhat always ahead of the curve. Now, don't forget to like, follow and subscribe our YouTube, Twitter and Facebook accounts at equityaccess.net, at equityaccess, and do visit our website www.equityaccess.net. Good evening.